Ladies and gentlemen of the crypto space, we're live on a Wednesday, May 1st at 11:48 a.m. Y'all need a dose of rationality on a day like today? Well, let's do it. And we take a look at Bitcoin chart because this is obviously screaming what the heck's going on. Then we can pull back a little bit and talk about what's going to happen the end of this month, heading into middle of 2024. And we all know what's probably coming by the end of 2024. And then obviously the title of the stream is Collectibles. And, we'll try and weave somewhat of a coherent story today. But let's start with some data. So 100 SMA on the daily was about 60, a little bit lower than 60, 59 and change, 59 and a half. So there's three technicalities in data, chart data, that's pertinent. First and foremost is levels, and that's indicates regions of concentration historically where capital came in or capital left, buy, sell pressure, so on and so forth. Then you have moving averages, and then you have technical trends. Trends, yeah, momentum, social consensus. Those trends are significant. They're the least significant levels where concentration of historic price action is probably the most significant. And then you have moving averages, because moving averages also is somewhat of that. Like it's not historical price action per se in terms of like levels, but it indicates where the potential price action is because everybody has access to this data. Everyone's looking at this chart and they're saying, where's pick a moving average on what time frame? 20 DMA, 100 monthly. And this happens to be the 100 on the daily. And that's a heck of a breach to the downside. You can look at shorter term moving averages, but frankly, at this point, Bitcoin is below everything on the shorter term moving averages. This is probably where we're at. I think the daily chart gives us probably the best perspective of where things are and where they're heading. Breach of the 100 SMA on the downside, you got your level of concentration. What was that, 52, 50 to 52? It's a pretty weak level. Like obviously, if you go from 40 to 44, this is a much stronger level. This is relatively weak. So look for a hiccup, a pit stop around the 52. And this is more likely than less the next destination. We will see weakness heading towards a destination. Things trend. They continue in the same direction. Momentum is the way the world works. That's the way price action works because price action is a manifestation of human behavior. And that's the way the world works. So we're trending towards the 50 to 52 region as a pit stop towards obviously a moving average. Moving average, let's say a little bit less than 50. Maybe this is the daily chart. Maybe it's about 50 by the time a couple of days pass, maybe a little bit higher, whatever. So we'll see. We have a couple of pit stops, 50 to 52, 50, and then obviously a big zone of congestion between 40 and 44, let's say, 44 and a half. Those are our three potential destinations. Looks like you need another catalyst to drive capital flows and shock momentum, which causes a change in behavior. Clear, and that causes the directionality reversal. TQE could cause it. We're starting quantitative easing at the end of the month. Notice how I say it, because it's not quantitative easing, it's Treasury buybacks. But that's a bid on whatever part of the curve the odds are is probably the long end of the curve, trying to uninvert the curve manually. They want to shape the curve, or they want to clear less liquid issuance, like 20 years versus 30 years. What the fuck is a 20 year? Or 5 year, or something that has less liquidity. They need the Treasury or the whole curve to have ample liquidity to suppress the volatility. Because as we've discussed significantly, the volatility in the Treasury market is what inhibits the capacity for the system to expand global currency supply. So sentiment is here. They're trying to shift that buy pressure out of the central bank because there's a whole lot of stigma with the central bank. There's a whole lot of stigma with the QE terminology. So now it's Treasury buyback program. But the market is going to look at TBB, Treasury buyback, TBBP, the Treasury buyback program as I don't give a shit what you call it. You're buying treasuries. You're creating a bid in the market. You're appreciating pristine collateral. And what we'll end up seeing is sentiment and how people are market actors are responding to that particular behavior. But in the end, quantitatively, we may see it actually in data. Move rolling over. I mean, it was a hell of a bounce on that 200 SMA in the monthly, but stopped out by the time weighted average price on the monthly, as well as the 10 SMA in the monthly. I don't know if moving averages have that much significance, but clearly that is a remarkable hit on the 200 SMA in the monthly. It is what it is. So we'll see how TQE affects Treasury market volatility, long end duration. At some point, if this rolls over, we know what happens. We understand a couple of key steps between now and the end of the month. We understand a couple of things that could happen between now and, let's say, towards the end of Q3 or into Q4. And we know what to expect probably towards the end of the year, if not Q1, obviously Q2 of next year. It's all heading in one direction. Nothing stops this damn train. Which leads me to my mentality that's taken 2+ years to develop and mature. And it's the title of the stream. It's Collectibles. It's the Collectibles. We're a bunch of collectors. We're a bunch of humans. Humans collect shit. And optimally, it's pretty simple observation that I've had. It's optimally, instead of collecting shit that's shit, collect shit that's not shit. But collect. Buy things. What else are you going to do with excess capital? So excess capital is just hoarding. That's clearly not a desirable attribute. Oh, I got excess capital. Yeah, I'm just gonna hoard it and tuck it away. I'll buy shit. So then the equation becomes very simply, what shit? And then what shit at what price? So we've already simplified the equation that if you have excess capital, you should be buying shit. Because there's no emotions here. There's no fear. There's no, oh, I need excess capital for a rainy day. What if? What if there's something I didn't consider? No. The appropriate thing to do with excess capital is to buy shit. Okay, great. We've already established that. And then the most important thing is to buy shit at a good price, because otherwise you're getting ripped off. You bought that house at 2x market value, probably got screwed over on the price, probably bought it at a premium. Now, it gets complicated, obviously, because sometimes you want to buy things at a premium, especially consumables, if they're scarce. Believe me, you're going to spend $20 on a gallon of milk if there's 50 people trying to buy a gallon of milk and there's 1 gallon of milk left in the fridge. You're probably going to spend a big premium on it. But optimally, you want to buy shit at a discount. So we've talked about this topic, and I don't need to, beat a dead horse, if that's even still a politically correct phrase anymore. So sensitive nowadays. I'm so old. I remember when comedians could actually talk about shit. So buy shit. Don't hoard capital. Buy shit at a good price because you don't want to get ripped off. And are you going to buy shit that sits on a shelf like our picture? That doesn't seem smart. It seems kind of stupid. I mean, there's intrinsic value in like literal physical collectibles as depicted in the picture, and I myself have figurines or playing cards or NFTs, and I like card games and whatnot. So there's value in that. There's entertainment value. So there's reason to pay a premium for something that's scarce that provides entertainment value. Okay, all of that makes sense. But with regard to instruments that you're buying for appreciation, one, sure, you better make sure there's scarcity. And that's exactly why pull twos were stupid back in like 21. Wasn't scarcity there. And people were paying a premium. Never pay a premium for something that's non-scarce. If you're going to pay a premium for something, you better be something that's scarce, but optimally, don't pay a premium for something that's scarce. Wait for other people to not listen to my streams because they're going to sell things at a discount that are scarce. So they literally do the antithesis of what we talk about. All right, so buy things at a discount that are scarce. Check, check, check. And optimally, that shit pays you. So that's just what things. So buy things that pay you at a discount that are scarce. Emotions have no business in this process that I just described. It's pretty simple. So what is scarce? What is a discount? Uh, you will be judged, and you can be judged quantitatively in a couple of years' time how well you define what is a discount, how scarce is something, and how well it's paying you. So the beauty of this market is it's taking score. You get a grade at the end of all of this and how well you did. It's all going to go back up. Currency cycle is going to cycle. Sovereign debt is going to be repaid. The global currency supply is going to expand. If you paid a premium over the last couple of weeks, you're underwater at this point. Things have depreciated, and you're probably contemplating should you sell your non-scarce premium priced assets. Well, there was obvious learning lessons there. Don't buy things that are non-scarce at a premium. And if you buy something that is scarce at a premium and is becoming a discount, then you bought it at the wrong price. So you were being judged, and you're obviously at a loss because of it. So you reassess your methodology for inspecting what is a discount, what is a quality scarce asset, and hopefully it's paying you because even if you paid a premium on something that's hopefully scarce and it's paying you, what are we here talking about? It's Wednesday, baby. What happens on Wednesday? Wednesday's payday. What's tomorrow? It's Thursday. It's payday. You get paid on base V curve. You get paid on Warden on Thursdays. Wednesday is vote market. Is all the solidly forks. You get paid. So today's payday. Tomorrow's payday. Do you think that's any different than last week? Do you think you're going to get a bit of a bonus this week because of the volatility? Yeah, it's going to be probably a decent bonus this week because of the volatility. I don't know. As much as the Bitcoin chart's doing what it's doing, just reminds me that the story I've been telling everyone is the only sustainable way to engage with markets. Everyone's running around driving themselves nuts because if you look at the monthly, this is where we're at. All of this price action over the last 14 years is because of the cycle, and it will continue to cycle because we've discussed what the alternatives are. There is no alternative. Tina, Tina from 2020 and 2021 never left the room, baby. Tina is in full effect. It's always been the case. But please rewind the stream and listen to the beginning where I talked about what qualifies, how to qualify reasonable actions, reasonable price points, reasonable assets to look at, reasonable businesses rather than assets. And you have a capacity to judge yourself because this game takes scores, and this game is scored in dollars. Yams in the house, Cap live. Good morning, Captain. My Y curve bags are too heavy. I'm ultra concentrated in Y curve and Ethereum. Please help me. Stop buying Y curve. I want to diversify my bags, but everything looks stupid compared to Y curve. Okay, so let's just do a very brief analysis. Y curve V2 pays soon. So you're in a speculative cash flow asset. I mean, YCRV obviously is an auto compounding and it's yearns, so it's a good choice. And curve is clearly at a discount, and Y curve is clearly at a discount compared to curve because it just can't hang with the peg as compared to like SDCRV. We all know that they are stronger because they have their own tokenomics on top. So these are interesting considerations, and I think you have capacity to make good decisions. And concentration is not necessarily bad. Just respect and understand the type of thing you're accumulating, the type of collectible you're accumulating. It's liquid. What have I always said about stuff that's liquid? At some point, if it's not nailed down, you sell everything. So that introduces a variable into your capital management equation. If you have something that can be sold at the highest price point possible before it starts to depreciate, it is your fiduciary obligation to liquidate it, which means you have more work to do as compared to other persons that construct portfolios of a different nature. And that's okay. The most important thing is to respect the responsibilities that you are choosing to take on. And I tell my children under 10, whatever you do in life, do it well. So you literally have to understand first what you're doing in order to be able to do it well. So just as long as you understand that, if it's not nailed down at some point, you are going to have to figure out when to sell things. And that's why I literally construct an entire portfolio that is nailed down. I cannot sell it if I want to. And therefore, I do not have work to do. But then, therefore, I require a different mentality and a different definition of capital management, how to, mode of operation, operating procedures, and a mentality. And it took a long time to retrain myself to be where I am. Just food for thought. Whatever you do it well. Be a professional. Hope that helps. Thoughts on CVX, but APR is low, 15 versus 40. Thoughts about FXN, but Z too low. Arrow too expensive. Well, you're starting to see discounts. Um, things are getting there, but it's not something, this is all a personal journey, and you will be judged. You will be scored in dollar terms in a couple of years. That's just the way this game works. Arrow's too expensive. Market cap, 402 mil market cap, 95 cents. It's going to keep going down as long as Bitcoin's going down. Um, it's too. How much of a supply can you buy? What kind of position size is reasonable? How much cash flow is it producing according to XYZ methodology? How much does it cost? How much is it paying? How likely is it to continue to pay? Is it at a discount? No. It's at a discount relative to all-time high, but that kind of discount doesn't mean shit. Especially with something that's relatively new. It's literally less than a year old. So don't give me that Bitcoin shit where it's a whole different story with Bitcoin. Like it's not at a discount compared to $50. Yeah, whole different definition of how to inspect Bitcoin compared to something that's a year old. Whole different ballgame. Um, I have a very high opinion of Aerodrome, and it is completely acceptable to me to not own it if I cannot own it at the price point in which I want to own it. Every time I say that, that is very much Warren Buffett methodology. You are a machine. You either get the discount you want, you either get the price you want, or you're not taking it because there is always, always something else to acquire. Period. You missed it. And that's okay. Not emotional. It's irrelevant. You can't own it. One, you also have to be respective of your portfolio composition. You got to acquire a reasonable position size. If you're going to buy 50 bucks of this and you got a 10 grand portfolio, what's the point? There's no point. So it needs to be appropriate position size relative to your portfolio. Two, one that also helps you invalidate taking a position. If you can't have an appropriate position size relative to your portfolio, done, 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 done. You gotta pass on it. Two, appropriate position size relative to market cap, outstanding supply. Maximum opportunity is when you could have a reasonable amount of ownership of a protocol. If you can't, it may not be a great position to acquire. Smaller the portfolio, harder it is to own a business, own a significant part of a business. Most favorably, 1, 2, 3%. More if possible, but obviously, 5 mil market cap, who's running around throwing $1 million into a position to own 20% of the business? It's very hard to own a dominant position of a business. So I like to think in terms of I diversify. I do want to have diversified exposure. So I often like to think of 1, 2, 3%. That is a great and healthy position size. If you can own 1, 2, 3% of a business, you own a significant percent of a business. May not be a consideration for smaller portfolios. That's okay. If you have a mid six figures, low seven figures portfolio, you can consider those types of criteria for sizing positions. That's cool. Look for things to invalidate taking a position because there's endless things to own. So you need reasons to not own things rather than reasons to own things. Hope that helps. Trantaloy, good morning, Cap. Hit the likes. Appreciate all of you on a Wednesday of bearish proportions. Let's go back to the Bitcoin chart because this chart, this is what. Look at the chart. This is crazy on the monthly. Above all the moving averages. And what have I said for all these months? You got a premium. Look at the monthly. And if you really want to get the most healthy perspective on the market, Bitcoin, you can't do the 6 months, so you go out to the 3 month. You're at a premium. Average price is $38,000. You don't want to see necessarily a bearish engulfing, but even if it was a bearish engulfing, you're taking us into, you know, Q, Q, end of Q2, Q3 with a close of the candle. So this you close Q2, you're sometime in Q3 it'll probably bounce off the 3 month time weighted average price. Maybe a dip below. You get to 32,000, you're at a higher low. Structurally, a higher low is great. And then you see the higher high, then it goes to 200 grand. So we've been at a premium all this time. That was a big divergence from the average price. This is all healthy market activity. The structure of the chart looks lovely. It's a retest. There's a retest and a rejection of previous all-time high. Okay? Simple as that. Simple as that. Hope that helps. By the way, also thought about LPing CRVUSD, 30% rates, and wait for interesting discounts. Yeah, be considerate. That 30% is a relatively small number considering a potential LP size. If you put in down 5 grand, 30% is 1,500 bucks in a year. All right, 5 grand kind of makes sense in a 1 year time frame, but 1 year, you're not going to put anything in for a year at this point because it'd be massive opportunity cost. Towards the end of the year, when the currency cycle starts to really set in, shit's going to pop off, and cash isn't necessarily the denomination you want. You want to own assets before shit pops off. So smaller position sizes, you throw 500 bucks into a 30% APR, $150 in a year. So, and you're going to be paying in a hot market, 500 gwei and $150 to remove the LP position anyway. So smaller portfolios really can't do anything with regard to LPing, and 20, 30, 40, 50% is a non-starter for a small portfolio. It's an extraordinary number in traditional financial terms. 20, 30, 40% is crazy. It's paying you for the additional risk you're taking in these volatile crypto markets. But in traditional financial terms, those kind of rates of return are absolutely extraordinary, especially with real estate doing what it's doing at barely above 10% with all the tax advantages and all the accounting tricks. But you're really talking about like 2, 3, 4% without all the added accounting fun stuff. So 20, 30, 40% is outperforming basically everything. And the beauty of it is when you really look past all the childish or juvenile or naive or quote unquote relatively stupid takes on crypto markets, you're talking about credit, foreign exchange, and derivatives. So again, 20, 30, 40% on businesses that are offering banking services at the global level, it really puts it into perspective as compared to like what equity markets offer you with regard to manufacturing. Uh, you're not getting shit for your money. You're not getting compensated for your risk. Frankly, I think there's more geopolitical risks in equity markets, especially like refining and precious metals. In what country? Manufacturing with international shipping, banking with domestic regulations of a respective country, or just permissionless global geopolitical arbitrage, regulatory arbitrage, interest rate arbitrage. This is quickly becoming the risk reduced market to engage with because it's a market accessible to all markets of no market. It's quite extraordinary. Or a market accessible to all nation states, but of no nation state. That is an extraordinary reality. Very important. Very important. Arrows in the house, much a pleasure. If you did not have your VEFX position and wanted fractional exposure, would you opt for raw exchange or FXS? You see what I'm saying? My man, we talk about these topics. We have entertained various aftermarket locked positions of late. And now you're thinking about raw, now you're thinking about FXS. Obviously, CVX is still the beloved. Got new stuff coming on Scroll. You got stuff on Mantle. You got stuff on Linnea. You got stuff on Bob for all I care. The Bitcoin L2. There's going to be more. There's going to be more and more and more. Drive you nuts. Drive you nuts. Maybe save the cash. Just wait. You don't need anything. Not even wait. Just save the cash and pay off some bills. I don't know. I don't know. Just woosah. Woosah. Just because you have cash doesn't mean you have to spend it. And on the contrary, is what I said early in the stream, it's not necessarily the best thing to have excess cash, excess capital. Complicated. But anyway, I didn't need to say those things. I could have just answered your raw versus FXS. I'm cursed with a capacity or a need to talk about shit I probably shouldn't talk about. Engage in your own personal decisions. Every one of these are your personal decisions of what to do. Just here to bitch and moan about them. The personal decisions. Raw versus FXS. So imagine I didn't have raw or FXS exposure. What would the captain be thinking? Um, well, we already have raw exposure because we have Ramsey's exposure. We have raw exposure because we've been LPing on raw for a bit, and that's not obviously for necessarily financial gain. You're getting raw points, so you're going to get raw. So we're going to, all right, great. So we already have raw. And raw gives us FXTL, which is cool. So it's a double exposure. Frax, share. FXS. I don't know what to tell folks. I've had an FXS positions for years at this point. So as much as you're telling me, if I did not have your VFXS, see that's the curse of talking about positions or stuff that one has. How could you talk as if you didn't have it? What am I supposed to say? I don't know. I've had this thing since 280. Zoom in on this thing, uh, and you can see pretty much the dip. If I could, maybe not the 4 hour, we could go out to the daily. And it was right around here, maybe. Yeah, yeah. This is 2021. I've been sitting on this thing for 2.5 years. I watched this thing at $52. That was a nice position at that point. I watched it deflate. Now I'm watching it hold support on a relatively critical level. I can't do anything. And I don't know. I don't know what to recommend. It's not for me to recommend these types of things. What can I tell you about it? It's potentially entering discount territory. This is getting interesting because this is, if you breach this level, you're talking about literally this congestion level, which is the threes and the twos, and where I got in. And then if it breaches that, you're getting to all-time lows, which is going to be like curve level of everything about its chart. where it's fighting the all-time lows. But what happens is at some point, vested interest is like, yeah, we can't let it go this low. And it's not just Frax team. You're literally talking about all the downstream protocols that are integrated and have either a direct or indirect vested interest in the protocols existentiality. And now they're like, shit, we got to buy. So, and that's exactly what happens and how price floors occur. 40 cents on curve looks like it is that level of existentiality where basically anyone that has exposure to the shared existentiality is buying. Look at the bid. Look at the bid at 40 cents. Drops to 39. It's not really getting much lower. And it was pretty ferocious when it got down to 36. I'm sure a lot of people are freaking out. And that's where people are kind of forced to intervene. Except instead of nation states, it's voluntary or opt-in market participants. Very interesting. I hope that helped, Arrow. It's probably not what you were looking for in an answer, but not easy stuff we do. All right, and hello, folks. Yam, good morning. Mr. Kaat, yes, indeedy. DA Advisor, good morning. Red Roo, hey, Cap, how are you going to vote on Ramsey today? I don't know. Does anyone know? I mean, you're either getting cash flow during the week or you're getting the upfront cash of rentals or you're trying to get a mix of both. I've done everything. Pick one. How I vote doesn't really mean anything for how anyone should vote. Pick one of the options, and that's what I'll do. I'm like, I'll check and see how much I can get up front, and maybe I just get vote rentals. Or what happens if there's a good LP that had great cash flow last week, and maybe that will be more lucrative. Or maybe a mix of both. So you inspect, you sort the columns accordingly, and you vote. And in the end, next week you will know how well you voted this week. And then next week, you'll probably make a different choice. And that's okay. You can't win them all. And sometimes you get a shit week and you be like, damn it, I should have voted differently. And of course, if you have multiple exposure to different solidly forks, it gets annoying and complicated. And at this point, if you're on like Thana and Binance Smart Chain, go over to Marionette on Hidden Hand, call it a day, done. If you're on Velodrome, use one of the what do they call it? The relays. I put mine in the relay. 57% of the money. 57% of the money is crazy. That's crazy. Basically, I don't care about the volatility. I don't care if I bought something and it's up 10x and then it's down 80%. I don't care. I care about my position being above water and it being productive continuously. So get those good price points, get those entries. If you haven't noticed, curve is this display is absolutely wild. If you go over to here, if you go over to my lock, I mean, you're getting like 40% between base V curve and rentals. That is an extraordinary metric. So in these regards, and with regard to this data, it's a good argument to indicate that curve's clearly had a discount. It's just that it's the most hated protocol in the entire crypto space because every dum-dum out there is like, I want it to go up in price. Whereas I come in and say, I just don't want it to go down in price, which is exactly what it's doing. It's literally doing my expectation. The only reason it's hated is because it's not meeting people's expectations. That's because most people have expectations that are not reasonable or not realistic considering what they're inspecting. 44% of the money that could be compounded changes everything with regard to an investment. You don't have this. You can't invest in Chase or HSBC and one get an actual dividend that's a result of their business activity because it's subjective. It's the board saying after everyone gets a bonus, everyone gets paid, all the human resources, all the benefits, all the capex and opex, all the executive bonuses. Here, peasants, here's your leftover shit, your leftover cut of what's remaining of the cash flow. Whereas with these, you get all of the revenue. So that's why this literally changes everything. So on a day when Bitcoin's at 57 and everyone's freaking out, I remind everyone that this is the most incredible investment landscape I've ever seen. And if you need to, rewind to the beginning and refresh yourself about discount, position size, and all those critical things. I could sound so euphoric or optimistic or excited about this investment landscape. All of that means shit unless you got a good price, unless you got a discount. Because otherwise, you're going to be underwater and you're going to be frustrated about principal valuation underwater, and you won't be maximizing your cash flow potential. Hope that helps. DA Advisor, what an honor. Much a pleasure, my friend. I got to get up on Leviathan soon. Cap is live. Cap, thoughts about Eigenlayer? How can we get exposure? I don't care what those guys are doing. Point system. Ooh, no interest. Community is here. Yes, indeedy. Levy's in the house. Arrow. Yep, yep. Get your curve positions ready and let's go. I listen. Haven't we all had this shit for years? So curve, yeah, clearly it's at all-time lows, but basically everything across the board. Didn't everyone buy Bitcoin in like the 20s? And I don't know. So if you're here since like 2016 and 17, got cheaper prices. If you're here in 2019 and 2020, you got stuff at cheaper prices than today. If you're here in 22 and 23, you bought stuff at cheaper prices than today. And it's probably the case that if you buy stuff like now or next couple of months and you find a good price, you probably bought it at a cheaper price than 2025. You seeing a pattern here? And that's the point of the imagery that I choose for the stream. Collectibles. The biggest takeaway I could offer you guys is you want to buy things. And that's really, I'm not going to reiterate the whole intro to the stream, but it's buy things at a good price and optimally buy things that pay you. So that's it. That's as simple as that's the reductionist three-word, three-phrase statement of how to be a successful investor. You have to buy things. You can't not buy things. So buy things at a good price that pay you. Hope that helps. What buyback program? Can you expand in a few words? What is that? Oh, Eigenlayer? No interest in Eigenlayer. You know why? Because everyone's interested in it. The last thing I'm interested in is what everyone's interested in. That means you're heading in the wrong direction. If you're looking at what everyone's interested in, you're not going to have any alpha or edge to inspect potential beta. It's very important to develop your own independent capacity to inspect these systems and to identify opportunities. And you can hear like alpha that comes from me and alpha that comes from people that we follow on social media, but you still have to understand them. How do you know if you're getting a discount? Don't buy at a premium. Treasury buybacks. Yeah, yeah, yeah. Uh, it's not QE. Not QE was not QE. People who don't understand QE, they throw around terminologies. They throw around Fed funds rate and like they're waiting for the Fed to cut rates for the markets to be bullish. Oh, he's printing, he's printing. They don't understand the concept of money printing. And what people hate about global financials isn't money printing because you need to print money to prevent uh, uh, excess appreciation of, of a currency. So what they really hate is subjective discretion. What cures all of the problems with traditional finance is opinion. Determinism and immutability is really the fix for Keynesian economics. I'm digressing into my macroeconomic opinions at this point. But Treasury buybacks are coming towards the end of the month. That will create a bid in the Treasury market. Not necessarily in size, like they're not going to really reshape it. It's going to take time and start out slow, but I'm pretty sure it's going to have a psychological impact. because they're expressing that they want a particular shape in the yield curve, and therefore the market knows they're probably going to try and get what they want. And if they don't get it, they're going to adjust their Treasury buyback program. Um, when Treasury buying curve. I don't know. I think it's going to be interesting heading into 2030. I don't see a reason why we see bigger corporations acquiring exposure. Look at PayPal. PayPal is already renting votes. That's pretty crazy. What do you think it's going to be in 27 and 28? It's going to be weird. It could be really weird. And I'm here for the weird. Much a pleasure, DA advisor. Always a pleasure. Cap, can we have a thumbnail of Agent Smith saying that's the sound of inevitability? I'll get it out on X later. I'll do that. I like those. I like the AI images. Collect shit that's not shit to collect. Quote unquote, baby. You can quote the captain on that one. Collect shit that's not shit. So, in other words, collect good shit. Stop collecting bad shit. Isn't it pretty simple when you cut through the bullshit? Collect shit. Make sure it's good shit. Make sure you buy that shit at a discount and make sure that shit pays you good. It's pretty simple. And then know that the system is inevitable to expand, which basically means the currency supply is going to, the boogie word, inflate. And that means nominally prices are going to go up. So, which means buy shit cheap, watch it go up, watch it go down. Make sure it pays you the entire time. Curse of the Reductionist. Diego is in the house. Tapsy. Hey, y'all. Hey, y'all. Sir Joe present. Rationality check. Snokes in the house. On point. Santax, thank you very much. Thank you very much. Irreverent. Glad to see you, Cap. When you compare liquid versus non-liquid assets, I'm not quite understanding the con. Assets like Curve and CVX nuke just as hard as others. Yes, but there's a psychological and an actual responsibility. And I'm not talking about the assets. I'm talking about the responsibility. It's not the process of nuking. All I care about is higher lows. I want to buy things at a price that in the future will be more expensive. And I would prefer it to be not cheaper than when I bought it in the short to mid term, which means I don't want to find myself underwater over the next 1, 2 years. And I prefer that it go up 10x and come down 80%. You know what's a great example of that? A perfect example is Ramsey's. If I bought at 1.8 cents, do I care that it was up at 20 cents? All I care about is that the price point doesn't go below where I bought it. And this is just a reductionist mentality of the overall structure of the portfolio that I want to create. I want to buy things that are worth or priced more in the future. And as long as I didn't make a bad choice and not buy at an adequate discount. Therefore, that is the rule for how to acquire things and assess whether it was acquired at an optimal price point and then what to acquire, stuff that pays me. Clearly, this pays us. It pays you weekly. So I think that's unambiguous at this point. Everyone understands that there's cash flow available in crypto markets to the tune of 20, 30, 40, 50, 60%. And, but also, with regard to your comment, responsibility. If you eliminate the potential to sell an asset, which is kind of unheard of in traditional finance, you have simplified your fiduciary responsibilities. Fiduciary means you have to act separate and apart from your interest, but you have to act in the best financial interest possible. So if you don't have a capacity to sell something, you don't have to think about selling it. You've simplified the equation. And I think that's a profound thing because otherwise you literally have 10 different things, 20 different things. You have to think about when to sell them, at what price point, and then maybe when to rebuy them again. And that's a lot of work. And I don't want to do a lot of work. I want to simplify the amount of work I do. So that's the story I tell you of how I simplify the amount of work I want to do. So instead of charting the portfolio and the all-time net worth, I chart revenue. What does a business owner do? If you own 10 pizza shops, are you looking at the value of how much you could sell your pizza shops every week, every month? Or are you literally just looking at the books, QuickBooks, and you're looking at the cash flow of the businesses you own? So that's what we told that story for years at this point, the pizza shop story. Instead of these being assets that you could buy and sell, what if you look at them as businesses? And how do people inspect businesses? My pizza shop on 8th Avenue and 3rd Street. I paid 100 grand. Oh, it's worth, I could sell it right now for a half a mil. Yeah, nobody's going around doing that with their pizza shops. They get their income, they pay their employees, they buy their supplies, and it's Friday, they go home, they relax on the weekend, and the business opens up on a Monday. And they're probably open on the weekends. It's a damn pizza shop. So sustainable, yeah, you have to be sustainable to engage with markets. You have to survive in markets. And that's really all we talk about is how to survive in markets because the market's going to expand. Nominally, everything's going to go up. There will be more currency in these crypto markets. And when I say currency, I mean dollar supply, as in you're going to DeFi Llama and you go to the stables page. There will be, right now, there's $159 billion as in stablecoin dollar instruments in crypto across all the chains. In the future, there will be more. It's already starting to be more. I mean, the chart really says everything. So where's the market going to be in the future? There's going to be more volume. Stablecoins are useful for one thing only, to buy things. So prices of assets will be higher. So got to redefine how you engage with markets to be sustainable to survive in the market. And this is coming really from like a 2016-17 perspective. And then prepping and doing, in hindsight, making the right choices in like 2019 and 2020, and frankly 2021 as well. And in hindsight, I made decent choices. And I will make decent choices between now and 2025. And then we'll check back in Q3, Q4, 2027. And, I'm pretty sure I have a vague perspective of what to expect. What am I going to expect in like after the market falls apart sometime at the end of 2025, heading into 2026, and then finally stabilizes in 2027? My expectation, actually, I told you, Arrow, this. I expect a higher low. I expect banana zone. It's going to get weird, like the all-time high, total net worth. It's going to go bonkers at some point, like disgusting bonkers. And then it's going to collapse, just like in 2022 and 2023. And you're going to be like, it's over, it's over. Oh, everyone is selling everything. I can't sell anything. You know how much volume is going to go through the markets when you collapse from instead of $159 billion, you collapse from $1, 2, 3 trillion? How much volume, how much cash flows are going to be going through those markets as everything's collapsing? And that I define as the best inspection, the best measure. Cash flow on the way up, cash flow on the way down, and over the years you will see the step pattern of higher lows and higher highs in cash flow. You can live on cash flow. You all live on cash flow. You get a paycheck at the end of the week from work. So buy paychecks. HMAC, much pleasure. The volatility exists regardless. So you see, volatility is noise. Volatility causes emotions. which is noise. Peering through the noise is only one, two, three things that matter. One, what type of asset? Two, well, XYZ. How much does it cost? How much is it paying? And how likely is it to continue to pay? So what type of asset is paying and how much does it cost? You better buy that shit at a discount because now you're buying as much as possible. You're getting an you're maximizing your capital in your acquisition of a business, so to speak. The story as we tell it. Hope that helps. Volatility will always be there, but it's bullshit. It's just noise. Lucian, good morning. It's still early. Yes, indeed. Yes, indeed. Santex, hey Cap, new to the channel. Could I get some advice on where to start on your videos to get a sense of more understanding of the markets? Love your content. I appreciate the interest. There's never a better day to start other than today. Start now. My content is not the best to start understanding financials. Uh, realvision.com. That will give you and it's free in good part. And the basic package is a little nominal. I think it's $150 a year, which gives you more broader financials, like traditional financials. But the crypto package is free, to my understanding. Still, haven't checked it a bit, but it, you need not just me because I have my own story, but what you need is all the big macro folks' story, and then time to digest it all. And then, because my story really is a story of my own personal capital management and my inspections and my opinions, which are a manifestation or result of all of that stuff I've absorbed over years. So interestingly enough, we've been doing this since 20 and 21. It's 2024, heading into 25. What was that, 3+ years? 3+ years? Coincidentally, ladies and gentlemen, I'm pretty sure that's the amount of time I spent in college that people spend in school. So when I'm 36, heading into 40, and now I'm 41, all right, 4 years kind of seems quick. So that was really a college education we just had over the last couple of years in financials and macro financials and crypto financials. And so where to start? Realvision.com, and never stop asking questions. Now with oh my God, ChatGPT changes everything. And pick what you like. Claude is great as well. Uh, Anthropic. And Just don't stop asking questions. There is an answer to everything. First and foremost, please understand the dollar and understand money, money versus currency. Understand that the government, they're not idiots. They're smart and they're effective and successful. They're keeping the system running, and that's their mandate, to not let the system fail. That's the whole point of Keynesian economics, to massage the system and smooth out the ups and smooth out the downs, and clearly they've done that. And obviously it gets complicated. There's a whole bunch of distortions everywhere. It's perverted beyond belief. A whole shitload of subjective opinion, a whole lot of corruption, and the cake is all messed up. But the better you understand that cake, the composition of the cake, and how the financial system works, and don't get lost in opinion. Fed go burr, money printer go burr, and you understand actually what it is. The better capacity you will have to make decisions with your fiduciary responsibilities in mind. Fiduciary responsibility, your financial well-being in mind, which is fiduciary responsibility has nothing to do with you want. Oh, you want a Lamborghini? That's not fiduciary responsibility. That's not. Your fiduciary responsibility is something that's rational and something that's reasonable. Has nothing to do with consumption. Basic needs, consumer staples, housing, uh, children's welfare, your kids. So that is always something to always remember when you're listening to my content. I'm not thinking about getting rich. Nothing I ever talk about has getting rich in mind. I'm cool with being wealthy. I'm cool. That's a decent goal. That's a reasonable goal. To be able to finance your life, take care of your children and your future, and pay all your bills, and have enough extra that you're not frickin' frustrated. That you're like, oh, that's cool. You could sit out in the backyard on a sunny day and be like, ah, I don't have to work. I get to relax and take a break and think about life. To me, that's wealthy. And to people around the world that are struggling in violence and geopolitical conflict, frankly, that is wealthy to be able to sit with the freedom to choose whether to go to work or not that day, or the freedom to choose uh, maybe you want to make a purchase of something. Freedom of choice is the ultimate expression of wealth, not excess. I don't give a shit about excess. Hope that helps, Santex. Long journey ahead. That's probably the best thing I could say. Mike in the shower listening to El Capitan. My man. Wash behind the ears. Sounds like a perfect shower, Mike. Snoke. Lucian, it's the same message, but using different examples and assets and Cap answering questions. Feel free to ask if you have any questions too. That's the deal. I answer every question, every stream. What's the B&B Theta optimizer called? Marionette? I can't see it. You go to hidden hand, and it's at the bottom on the left called the Marionette. And it basically just takes your VETHE position, your locked position, and automatically compounds harvest. You got a couple of different options. Auto compound harvest, max lock, and I don't know, stuff like this is really nice. Um, Cap, how would you describe your thesis on what makes a chain worth getting exposure to? Narrative and change and weekly stable flow? Yes, weekly stable flow is very important. Delta in volume. I'm not too interested in TVL. I think that's a lot of noise because TVL is kind of like M2 versus M0. I'm interested most in base money, so obviously you have base money in macro financial terms, uh, which, which is M0 according to Fred data. But in crypto market terms, base money is literally this. You can see it here. Like if you want to know how many dollar units are available on Arbitrum, you go here and there's $3.83 billion. Now, if Arbitrum was a closed environment and there was no capital inflow or outflow, closed environment, if 100% of every asset on Arbitrum was sold for dollars, stablecoins, this is the maximum amount of value that those assets could be sold for. So the TVL is kind of like an M2, total deposits, expanded capital, so to speak. It doesn't mean anything. If you have $20 billion worth of TVL and Arbitrum, this is a hypothetical for an example. As a closed system, $20 billion will be sold for $3.8 billion because this is the amount of dollars. These are the maximum amount of dollars that can be purchased in a closed environment. So I hope that helps. So stablecoin flows are massive. Has a massive inspection. Volume is an important inspection. And narrative as well, like a chain like Linnea, associated with consensus. As much as consensus is very popular right now, considering they're suing the SEC and the SEC is suing them, uh, that's exactly what I want exposure to. So think about those types of things. Uh, Frankly, Binance is an interesting story. I used to have a great deal of distaste for it, um, but it's very interesting. You know, CZ and his complexities right about now and going to prison. His stepping down and Binance, him stepping down was probably like Binance like solidifying itself in the court of opinion, but also the court of public opinion. They're kind of, I think that is basically the aura they're giving off, like an established firm. And that's interesting. So, my general sentiment about Binance Smart Chain has changed significantly over the last year or two. Um, but every chain has a story, and it's gonna get. See, here's the thing: it's gonna get weird because you can't have exposure to all the chains. Because why? What's coming? Meta chains, chains that have components of chains, and that's exactly what Arbitrum Orbit and the Optimism, um, both of them, Arbitrum and Optimism, what they're designed to offer. You could settle on Arbitrum, execute on Optimism, and store on Celestia. What's the name of the protocol? I follow them. I never remember it. I never remember anything. It's hard to remember things as you get older. Conduit. Look at this thing. This thing is great. This is what the Gen chain used to build. Uh, can I sign in? Sign in. All right, I'll sign in. Thank you, Conduit. No, I don't want an organization. All right, fine. I'm not signing in. I just wanted to see their portal. Maybe they have a screenshot. Yeah, check it out. What am I trying to sign in for? I'm showing all you guys all my email addresses and shit. Um, so build your stack, framework, optimism, or orbit, settlement on Ethereum mainnet, data availability on Ethereum, Celestia, or Eigen. Isn't like 5 years from now where you're building on 50 different frameworks and 50 different settlement layers and 50 different data availability layers? So you're never going to have exposure to everything. Very interesting world we're heading into, Lucian. Hope that helps. Look at Redacted Cartel, Hidden Hand. We'll explain there. That's the deal, Mike. Yes, indeed. Can someone explain the disparity in VE curve yield versus CVX CVRV yield? CVX CRV is sitting at 25% in stables. Well, CVX CRV is concentrated. Uh, is it one to one? Maybe it's one to one. Because clearly, like VLC, CVX isn't one to one. It's multiples of CRV and per CVX. So I don't really know how that works. But so my general sense and statement that I can make is you're dealing with derivatives. What exists in markets? Credit, foreign exchange, and derivatives. CVXCRV is a derivative product. And I made a condition or a promise to myself all those years ago that I want to avoid the derivatives. I want to own the base layer. Avoid the complexity because the complexity requires decisions and choices. And I don't want to make decisions. I want to make less choices. I want it to be simpler. So that is generally my sentiment with regard to derivatives. Doesn't diminish the significance of derivatives. The derivatives account for significant supply disruption. And that's literally what we've talked about with regard to federations and downstream protocols that are sterilizing excess supply. There's all derivative systems and derivative tokenomics that apply additional incentives, and it's all very meaningful. I wanted to keep it simple. Hope that helps. The con, I'm all in crypto. Should I sell some and wait for more dump or stay invested? Well, you're going to have to figure out what your definition of all in is. Sell some and for more dump. So you're going to have to define what these thoughts really mean to you. You should always have sold some. You should always have cash on hand. Now, it's interesting that I define Bitcoin as cash. It's a price point that changes, But I define it as cash because you could spend it. You could put the Bitcoin on a debit card and spend it. Now, optimally, you want to spend it when it's worth more rather than worth less. Therefore, it's more favorable to put stable coins on a debit card than Bitcoin, especially if Bitcoin is depreciating. So it has clearly characteristics of cash because you can spend it. One, two, it's very volatile, which means there's some times when you don't necessarily want to use it as cash, when you don't want to spend it. So it doesn't give you the greatest flexibility with regard to your capacity to purchase things, to consume. So you have to literally, it increases the complexity of your cash management. But obviously, it has all its benefits over time into the future. So, with regard to selling things versus staying invested, uh, listen to the entire stream again and ask questions next stream. I literally don't have a capacity to sell the things that I have invested in. I didn't invest, I purchased. And that changes the equation. If I cannot sell something, I don't have to think about it. And therefore, I told you guys the whole stream, I inspect more so the cash flow. So, because what does the value of it mean? It has no fair market value. And these are traditional accounting types of conversations. If you can't sell something, if it's not transferable, it has no fair market value. So that's an interesting proposition. And there's nothing else in traditional finance that has those kind of properties. Something with no fair market value that produces cash flow. That's quite extraordinary, to say the least. Davey K, delighted to find your channel through Blockmates, a great captain to lead us all through the current choppy waters. Let's put up the choppy waters as we're talking about the choppy waters. Push down below 57. Ooh, Bitcoin below 57. The world is ending. Let's zoom out. It kind of is like we're like right at the top or something. Imagine that. When you put things into perspective. Jeebers, creepers, $57,000. If you were here in 2016 and you heard $57,000, you'd be like, holy shit. You're welcome, Davey. We keep it rational around these parts. Keep it rational. Tape pusher, got it, thanks. The con, I'm all in. Is that what you said? Oh, no, I'm missing a couple. Getting tired towards the end of the stream. Margin plus cash flow. Interesting thought. Pizza shop is back. Never left. 2022 rational community copium. Yeah, we had. Listen, that whole diamond hands, hodl, copium. See, the most important thing. Emotions are irrelevant. These words get thrown around and they cause an emotional response. But emotions have no meaning in this space, no meaning in a fiduciary responsibility to handle capital management as best as possible. There's no such thing as diamond hands, copium, and hodl. Those are acronyms and just shallow terminologies. It's like terminologies allowing people that are desperate to wrap their head around the complexities of finance. And they're like, I'm going to huddle through everything because I don't understand how anything works. So I'm going to diamond hands it to be part of a community because I need to be part of a community. I'm sorry, folks. Capital management is a one-player game against yourself. There is no community, not in finance. Very, very important. You're playing against yourself. There is no community. Don't make the mistakes of the majority. You can do better. You can be better than that. Irreverent? Yes, indeed. The con, I'm all in crypto. You hit me a couple of times, the con. You got to figure that shit out. Come back and let us know. Let us know what you do. Everyone has the same choices to buy or to sell. But maybe just rewind like a minute ago and hear what I said about HODL and Diamond Hands and Cope. There's more. And I always said all those years ago, there has to be more. There has to be a better way. There has to be something that's psychologically sustainable that doesn't drive you nuts. And that's the story we've told all these years. Um, Igor, hello Noah. What are your thoughts on multi-coin? Opinion on investing thesis that technology aims to reduce fees to zero, and that's why they evaluate everything through generated minor extractable value. I don't know. No idea. I don't have an opinion. Mav, are you talking about like Manifold? Manifold finance is very interesting. Was it yeah, it's interesting. XYZ? Uh, run the numbers, run the inspection, run the analysis. Not really much of an opinion. So can Curve competitors somehow disrupt markets with zero fees? What do you think Maverick's doing? Look at Maverick on base volume base. Maverick up at number 3. I don't know where Aerodrome is on here, but Maverick is cranking some serious volume to TVL. Let's go over on Ethereum. Maverick has a pretty shitty volume to TVL. I don't know. Point being, they have hyper capital efficiency, and that's basically what all the solidly forks do. Hyper capital efficiency, 2.85 compared to Camelot at 0.72. That is a day and night of capital efficiency. Of course. But what are they disrupting? The exchange. If you look on Ethereum mainnet curve is number 2 compared to Uniswap, and it's been like that for quite some time. What does that tell you? It tells you it's a duopoly. It tells you Uniswap's probably not going to get disrupted. It tells you, frankly, it also is a lot to be said about it's irrelevant. Why? Technology that's better isn't always the most popular. 1. 2. I have talked most recently that it's the exchange part of Curve isn't what interests me much anymore. The story has changed. I think Solidly and the VE33 forks are much more interesting from an exchange standpoint. They have much greater capital efficiency. 2, I think what's so damn exciting about Curve, 1, it was the first, and 2, CRVUSD, credit. 3, they have a complete in-house vertical tech stack to manage their bank deposits, because that's what stablecoins are. Portable and fungible bank deposits. Stablecoins are an extraordinary technology, the biggest business in the entire crypto space. And Curve has an entire vertical stack. So Curve reminds me of Frax, I guess, with regard to the scale and scope of what it means in real financial terms, what these businesses are. It's just some context. I think Andre killed it. He nailed it. True bifurcation of incentives. And that's what Curve did with voter escrow. Bifurcation of incentives. They didn't realize it. I don't think Michael realized it when he launched Curve. He probably thought about, incentives and disinflationary tokenomics and in 10 years' time. And I don't think he saw a bifurcation of incentives like the way Andre did, and because Andre built it from hindsight, well, the hindsight experience. So it required the Federation to really allow voter escrow to work, to bifurcate the incentives with regard to renting votes. But voter escrow is very limited because it doesn't work without a federation. And that's why Maverick is struggling. Not struggling with regard to that protocol, but struggling with regard to that price point, I guess. And I don't see voter escrow working, period, without downstream federation. And federation means protocols that basically organically and opt in to the model where the central currency provider uh, becomes existentially tied to all of the participants in the federation. So Curve is an organic manifestation of basically the petrodollar of sorts, at least comparatively speaking. So it's like, here's an interesting one. Microsoft versus Apple. Apple never, ever, 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 ever disrupted Microsoft's business. Ever. Microsoft is a totalitarian owner of business products, business software. So in that regard, I mean, Curve's never really been disrupted. Just because someone else maybe makes more money or outperforms them in the long run, it doesn't mean anything. It's an entity unto itself, and it has established itself with regard to first mover advantage, with regard to voter escrow, the build out of the federation, and just the tech stack that's absolutely extraordinary in traditional financial terms. So I'm not too worried. I don't really think about it from that perspective. Like a competitor competition isn't really competition always. Irreverent, my man, love you too. Beautiful. Um, that's about it. It's a Wednesday. Anything else to look at? Where's Arrow at? 97 cents. Doesn't hold on the 382. We'll see. Listen, I think a nice price for an aftermarket lock is 38 cents or less. If you're able to get it 38 cents or less in this region here, between, let's say, 4, 5, 10 cents, 10, if you can get between 10 and 30 cents, I mean, clearly it's a discount compared to $2.30, 10 and 30 cents. So you might not be able to buy it. And that's okay. And that's what I've been telling folks. But if you get discounts, it changes the equation with regard to position size. You're owning much more of the protocol, much more of the business. And just because you can get a discount doesn't mean it's the appropriate thing for the portfolio. You got to get a position size that also respects the portfolio. If you're buying $10, it doesn't matter. So just be cognizant. It's not a simple equation, even if a particular price point is met. So look at that zone. You can see it. It's screaming at you, trying to get past the pop-up. Here, let's put the zone, highlight the zone. Rectangle. I mean, look at it. Isn't that zone screaming to you like it's a good zone? It looks good. If I could write the word sexy, where is it? Can I do text? Yeah. Sexy zone. This is the sexy zone. Look at the sexy zone. That's the sexy zone. It's a good zone. It's established business. It's interesting. And look at that price point. If you could get it, if you're lucky enough to get it at a good size. Velo between 382, 236. Same zone. Probably talking about 8 cents down to there, 4 to 8 cents. 4 to 8 cents is crazy. And I think there's some aftermarket locks that are probably in that zone right about now. Well, that's an interesting zone. Look at how long it's spent at about 4 cents. All of these months back to October of 2024. That's a very interesting price point between 8 and 4 cents on Velo. Ramsey's, same thing. Anywhere between where we are right now and like, I don't know, what an average price point of about 3 cents, 2 to 3 cents. That looks pretty interesting. So 2 to 3 cents and 6 cents. Probably get those in aftermarket. And, fortunately, I don't know, I literally bought the bottom. I think this all started moving up because of pipe purchases. Go figure. I was literally 1.8 cents at the bottom. Like this might have been my candle right here when I took some stuff. I don't know. Is what it is. Hindsight's funny like that. Look at that zone. Interesting. Interesting when you look at things from that perspective. If you can get it at the cheap price, you get it at the cheap price. This is weakness right here. Support is a position of weakness. Position of weakness. And you're probably talking about anything below like 236 and down to maybe like this zone, like 1 19 cents, 19 cents to 60 cents. Anywhere in there is a pretty reasonable zone of congestion. This is a strange chart though. It's not like you have an incredible amount of support. You know, like when you look at Velo, this thing was just boom, horizontal for months. So if you're looking at something like Nile, it just went parabolic from the get-go. Like literally March 21st. For 2 months, it just went straight parabolic. So this is a little bit of a harder chart to get a sense of where like maximum opportunity zone is. Interesting expression of support, spot on 236. Inverse head and shoulders at the bottom. I don't really know on this chart. Where do you get a sense of a retrace? It already retraced from 120 down to 55. Maybe you get more of a discount from here. I just, I'm not, in hindsight, I probably should have doubled down on Nile and Linnea versus the Mantle narrative, and that's something I've been thinking lately, but whatever, you can't win them all. Thank you all for joining me. 375 human beings made it to the end of the stream today. I appreciate each and every one of you. I love the questions. I wish I had more questions from X, and I wish because when I answer questions, I'm helping folks, and obviously by me answering the questions and helping people, I'm helping myself because I get a perspective, I get a sense of what other people are thinking, and that makes me better too. So please, if you're on X, next time, you know, find it. Find it in you to think of a question, have the courage to ask a question, and I'm so more than happy to answer anything on your mind. Other than like, what am I doing later? If you're going to ask me what I'm doing later, that's probably not a financial conversation. It has a little personal. I wish you all a good one. Wednesday, May 1st at 1:09 p.m. Tell everyone to subscribe. I will see you guys on a Friday. 2 days. Have a good one. Peace.